my advice is just think about alternative exit strategies and sort of have those and show that you've thought about those. A good capital advisor or finance broker is worth their weight in gold to the lender. Packaging the information is described in the way that lenders like to see it. A good capital advisor will know how that should look and what is needed and what is not needed.
Hello, my name is Alex Harrington-Griffin. I'm your host of the Real Developer podcast, powered by the awesome LandTech, creators of Land Insight and LandFund. In this episode 10, we get into the discussion around what is affecting the lending market at the moment. My co-host, Oliver Holden, senior broker at LandFund, joined me to talk to Callum Ferguson, head of business development at Clearwell Capital. And together we got into everything from the importance of having a plan B exit, doing your DD on your choice of lender, whilst also looking at the value a broker brings to the table. Remember, if you enjoy the episode, please like and subscribe. And on that note, let's get on with the show. Hello, everyone, and welcome to the Real Developer podcast. My name is Alex Harrington-Griffin. I'm your host, and I'm joined by co-host Oliver Holden, senior broker at LandFund, part of the LandTech ecosystem. Morning, Ollie.
Morning. Thanks for having me.
And we are getting into a part two of a conversation on the funding landscape for SME developers. We've got Callum Ferguson, the head of business development for Clearwell Capital. And in episode 9, we went into a little bit about the internal process, of Clearwell Capital, what developers can do to be mindful of the current landscape, how they can work in it with any lender, and what they need to be mindful of as well. This session for our audience is to get into a little bit more about the external environment and the risk that comes with development at any time, and obviously the lenders. But what we're trying to do is to get in people's head the mitigation, and obviously understanding from a lender's perspective what you see as potential risk elements or greater risk elements for next year, but also things you think you're excited about. So we can talk about positive things as well.
Excellent.
To kick us off, Callum, for you guys as a lender, what do you think is some of the biggest challenges you've got? And then how are you positioning yourself to make sure that you can lend as much to SMEs next year?
There's a couple of challenges out there. I think there's going to be an election at some point next year, which will cause a bit of what tends to happen around elections is people sort of pause or slow down a little bit with investment decisions, and that's not just funders and people like that, but people buying houses. Right? They may choose to sort of hold off for a few months whilst the landscape becomes clearer. We've also got sort of high interest rates, albeit more stable interest rates now that sort of, I think people can kind of understand what their mortgage is going to cost them if they move now over the next 2 or 3 years. So although that is still a challenge, it is also maybe we're over the brow of the hill, if you like. So from a lending perspective, we're making sure we're communicating and collaborating with our current borrowers, making sure that we're on top of everything that they're looking to do next year, and making sure that we're kind of best placed to help them with those projects. We're also sort of making sure we're speaking with the market of capital advisors to make sure they know exactly what sort of products we're offering and how we see the market going forward. So really just making sure that people know what Clearwell want to do in terms of a lender, and actually making sure that the people we want to lend to also know we're there to support them. I wrote a piece at the start of this year for a sort of industry publication, and at that point there were a lot of uncertainties, I feel, in the market. You've got sort of, and there still is a bit of global conflict going on. You've got a sort of political situation in the UK which always seems a bit on a knife edge, and you had interest rates that were rising quite rapidly. I feel that although none of those sort of things are completely resolved, they are more stable, and it's a better position to look to underwrite at the moment because these things are now baked into people's expectations.
The shock factors are sort of baked.
Yeah, exactly. And the other thing was you had a lot of growth in house prices over the COVID period, and everyone kind of knew that you're underwriting on data that is going to taper off or at least flatline at some point. So you just don't want to get caught in that position where you've underwritten against a high value which is tailing off, and you've got other pressures that are leading to construction costs, and other things going up, finance costs going up. It just squeezes the margin on the deal. So I feel like it's a better time now to underwrite a deal than it was 12 months ago, and that might sound a bit strange, but it certainly is.
Can I just, I suppose, fast track a question on that as well? Because one of the things in doing our initial research and getting to know Clearwell, for me anyway, was that you sent me the house price guide that you produce.
Yes.
That obviously is a fair bit of work. How does that feature in your underwriting decision-making process? What is the purpose of those kind of documents for your borrowers and your internal perspective?
Yeah, I mean, from an internal perspective, it's something that we do on a monthly basis, so that I think we'll feel we've got the best handle on what's happening, and the best way to do that is to understand the kind of binary data points that are going into that. So stuff like mortgage applications, house prices, growth, all that sort of thing. Listening to the news and picking up those bits is not the best way to do it. Actually, if you look at what's happening, and that's the purpose of that document, to sort of give you a sort of, a number of charts, a number of graphs, a number of sort of data points that can say, this is what has been happening for the last 3 months, a more real view, and that should allow you to identify trends, and sort of see, make some judgments as to where we are. So the purpose of it internally is to give our sort of, the leadership team a sort of a reference point to sort of make decisions on where we are going to be in terms of gearing and products and that sort of thing. So taking that into account and looking at that over a period of time. In terms of our borrowers, it's sort of it's for them to understand that we look at all these sorts of things, and we are making informed judgments, hopefully, on what's happening in the price, in the house prices sort of spectrum, in interest rates, what's happening with those, what the forward curve is saying. Mortgage approvals is a big one that we've been looking at, and also planning applications, so we can make a judgment on how much or little there may be coming through over the next couple of years. So there's a number of different things in there. It's to hopefully give you the best, most informed starting point to make a decision. No one can predict the future, but you can be as up to speed as possible on what's been happening in the sort of short to medium term.
Well, hopefully some of LandTech's data or data sets, whether it's from Home Tracker we had into the studio a couple of weeks ago, or the planning reports, can make their way into your house guide index at some point. Can I just ask quickly, does that feature as part of the consultation process when people you're getting to know a new borrower, you're looking at a scheme? Because obviously, if you've got that information to hand, if it was in our team, and I know the data that goes around LandTech obviously is circulated so that we all have an idea of what is going on in the market, and we can, everybody in the business can be aware of what our clients are going through. Does that feature as part of the initial discussion to say, great, really like your proposal, your timeframes, everything else. Have you factored in, this is what we're seeing at the moment? Does it become part of a consultation to kind of fine tune, or is it more just a checklist for you guys internally? So far, it's been used internally. I think you raise a good point. It could be used actually in more of a consultative way with our borrowers. But I think really, we want to understand that our borrowers have thought about the exit, and have we thought about a couple of different ways we may exit if things aren't fantastic out there. If a borrower is telling me, it's a bull market right now for selling houses, I probably would have, that might be a bit of a red flag. But just understanding that they've thought about the exit process properly. But yeah, I think it could certainly be a sort of consultative tool for that sort of thing, particularly data that isn't as widely reported, stuff like mortgage applications and things like that, because that is really important. If people aren't getting their mortgages approved, they're not going to be buying houses in 2 to 3 months' time. So, and if there's been a steady decline, there may be an underlying reason for that. So, yeah, it could certainly be used in a more consultative way.
So, Callum, you've mentioned a lot on what Clearwell do in terms of the underwriting process, and we all know that historically 2023 was a tough year for valuations. And you mentioned previously that one of the main things you're seeing are longer sales periods at the back end of these developments, which you've just touched on there. Is there anything that you can share that would help, or would help a developer in the current situation, current market, when considering lending with that in mind?
Yeah, I think unfortunately, factoring in higher finance costs should be, you always have a build contingency in the numbers you put forward in an appraisal. I would think from a developer's perspective, having, realizing that finance costs may be a few percent higher than when you would imagine, because we are not seeing lots of off-plan sales at the moment. We're not seeing it's not that sort of market. People want to go into it, want to go into the property. It needs to be dressed, it needs to be almost oven ready, if you like, to buy. So appreciating that period may stretch longer. So I think from the outset, maybe being a bit more cautious in your sales expectations themselves may save some issues later on when you're already a bit further down the track. And I think also exploring the other kind of exit strategies that are out there. I mean, there's things like LDS sales guarantee, which I know we've spoken about in the past, which is not a perfect solution, but it is a solution to give you that certainty that there is potentially a fallback exit there, which in this sort of market I think most lenders would appreciate. There's also there's a lot of registered providers and local authorities out there that have actually quite large budgets to sort of buy affordable housing. So engaging with people like that at an early stage and showing that you've had those conversations to lenders, it can be a really good way also to mitigate. You can show you've got a fallback scenario lined up, or it's at least in the stage of being worked on. The lender's far more likely to kind of maybe challenge the valuer on the sales period, or maybe say can we underwrite something lower. I think the problem you had over 2023 is the fact that you've also had base rate going up. So the buy to let option, which was quite often the kind of get out of jail free card, if you like, of sort of been delayed in the build, but I can rent them or get a dev exit product to sort of find my way through. It has been harder to get because the loan's been more expensive than you expected, and the new loan is more expensive because the base rate has gone up. So I think now things are a bit more stable. It should be a bit easier to kind of work through that, but that would be my advice, is just think about alternative exit strategies and sort of have those and show that you've thought about those when you're going into the initial underwriting stage, because a valuer may well stick 3 to 6 months on the end of your sales period, which will affect the amount of money you're getting on day one from your lender.
It's quite a nice segue, actually. One of the questions I wanted to ask you was about where do you as a lender see risk, and more specifically, where is there more risk than in certain areas than in others? We've spoken about delays there, which obviously with increased interest costs, that starts to become far more relevant far more quickly. But as a lender, where do you see the bigger risk? Is it planning delays? Is it the sustained high land values? Or is it the housing market and values going down, going up? We're not entirely too sure where they are at the moment. Where from your seat is the most or the biggest risk at the moment to you?
Yeah, it's an interesting question. So actually, I'm going to surprise myself a bit with the answer, because we don't really do much planning lending, but I do think that is the biggest risk to probably the sector as a whole. I mean, you guys at LandTech maybe know better than I, but the number of planning applications being approved and actually being submitted, which more worryingly is dropping quite drastically, and has been so for the last 18 months or so. So there will undoubtedly be less development projects being started over the next 2 or 3 years, which is mean there's going to be more pressure on supply, which is then going to funnel into the second, part of the question, which is, that will undoubtedly lead to higher prices, and land value will stay high because a consented site will be more sought after. And as we know, if the land value is too high, the project is almost under stress from day one because you haven't got the correct margin in there. People then looking to take shortcuts and, to sort of keep costs down. And that ends up with a less desirable, project. And you're building things that people are going to live in. If they don't, if it's not done well, if they don't like it, they just won't buy it. It's not the sort of asset that of course, if you drop it down enough, it will most likely sell. But it's got to be finished, accordingly to the target market. So that a lot of those things are interlinked. But I think certainly the sort of level of planning applications is probably my biggest concern going forward. I think the kind of value questions are, always they're always very important. And I think land value is always notoriously sticky. It's called residual for a reason, right? It's the last thing that changes in those valuation reports. So, I think, that is a concern.
Thanks, Callum. So as we've just discussed, there's a lot of moving parts in arranging a loan facility. Where's the value in a borrower bringing a debt advisor to the table? Someone such as LandFund that are there from start to finish. There's a huge amount of information that we bring to the table from the LandTech ecosystem. Does that benefit you from the outset and enable you to speed up your initial underwrite and then help from that point forward in terms of loan drawdowns, professionals, etc.? Or do you find there's too many sort of chefs in the kitchen, so to speak?
I think that a good capital advisor and or finance broker is worth their weight in gold to the lender. Packaging the information as described in the way that lenders like to see it. A good capital advisor will know how that should look and what is needed and what is not needed. So packaging that up in the first instance gives the lender the sort of best chance to review it quickly. Yeah, this looks like a professional outfit that are doing something sensible. So you can get your terms nice and quickly and get the process off to a good start. And also once you're in the thick of it, if you like, when there's lawyers, when there's valuers, when there's monitoring surveyors involved, having that sort of conduit between the two parties it is incredibly useful, and in my opinion does add a great deal. That there are certain times where it can feel like there's too many chefs, but that is generally the exception to the rule, I would say.
Just going back to sort of the market situation as well, one of the things that I was interested that you shared with us in our briefing session was around, we know there is a lot of stress for the contractor space at the moment. You also spoke about the consolidation of small lenders. And obviously that comes with a degree of sort of developers thinking, well, I wonder if it's going to be my lender or I wonder what can happen if I go and work with a certain lender. How do you think that process is going to affect borrowers, both from existing debt and people who are in the process or about to take on that a new loan?
In this process in general, both parties are doing their due diligence, aren't they? We've spoken a lot about the due diligence that we will do as a lender on the development and the developer, which are the two elements. But I think the borrower and the capital advisor should also be doing their due diligence on the lender. Understanding where they are, how they're performing, knowing where their funding comes from. That's a big question that I think good capital advisors always ask and should be able to pass on to their borrowers. And it's a great question here from a borrower. Where does your money as the lender come from? Because it's really important. As for consolidation, we'll see in 2024. I think there's certainly a chance that happens. I think you're starting to see sort of across property as a wider industry. There's been a few quite large deals this year. CoStar, for example, by was it Prime Location, I believe, or one of those websites. You've also had Cheston's, a very famous London agent, be bought over by European funds. So across real estate as a whole, there are sort of there are some sort of interesting transactions happening across various companies. How that will affect the lending landscape the next year, we will wait and see. But yeah, I would always be pro asking your kind of funder directly, where does your money come from? And if they can't answer that, then it's probably a sign to maybe dig a bit deeper.
I think I'm going to ask politely if you can give us a bit more detail on that as the last piece. So we always finish our episodes with the real advice, and we try and condense a 60-second sort of key takeaway. I was going to ask you about equity because it always comes up, but I think actually that's a really good point, because as a former developer, I would always just feel that I'm beholden to the terms I can get, see if I like the person I'm working with, see if the broker says, that's a good, you're getting a good deal. I probably wouldn't have taken the time. And I'm not saying just purely for those new developers, obviously those who have become, quite sort of nonchalant in the way they do things because they're confident, probably again wouldn't go back and ask them those questions. Is there one or two points that you think, beyond asking what is your source of capital, that you think a developer should and could be asking their potential lender to make sure they do understand who they are partnering up with?
Yeah, there's a couple of things. I think certainly that question would be number one on my list is where does the money come from and how solid is that? I would also ask if I was the borrower always how, rather than telling me about your success stories, which we all do, we all like to post on LinkedIn and other platforms when we've successfully been repaid or successfully written a deal. I think I would ask the lender how the last workout situation happened with something that didn't go so well. How did that process, get resolved? What was the reason for it? And ask for an example of the sort of nastier side of the industry, if you like, to get chapter and verse on that from a lender, because and they won't be able to. Of course, people won't be able to mention specifics, but they should be able to give you a kind of a decent synopsis of what happened with something that didn't go so well. So I think because it's one of those industries, real estate and development particularly, is that when the sun's shining and everything's great, everyone's friends. When things get a bit tough, that's when you actually find out how sort of fair and kind of equitable, if you like, for want of a better word, both parties are in terms of the position, because it's that's the real sort of litmus test, if you like, is to finding out who's going to stand behind what they've put forward from a developer in terms of what they've said they can do, and also from the lender in terms of are we going to stand behind our facility and make sure that we're giving the developer every chance that it's a fair chance to sort of redeem the situation, or are they going to be trigger happy and sort of look at any sort of excuse to bring in the men in grey suits, if you like.
Well, another great soundbite as well. You're quite good at those. You might have to bring you in for a few more to finish off next series as well. Callum, Ollie, that's all we've got time for today. For our audience, do connect with or check out the show notes to be able to connect with our guest on LinkedIn. Obviously, check out Clearwell Capital for more details on their lending journey and lending focus as well, and also a lot of the good development finance publications that are out there as well. I've read some good articles from you guys recently. So
thank you very much.
Thank you both for your preparation.
Pleasure. Thank you very much.
Hello everyone, it's your host Alex Harrington-Griffin again, just to say thank you for joining us for this episode. If you liked it, hit the like button, subscribe, and of course, share it with your peers. A big thank you to our partners LandTech for powering this episode. If you want to find out more about their products like Land Insight or LandFund, go to land.tech or follow LandTech on LinkedIn for SME developer updates, finance updates, and of course the data and research mentioned in this episode. We'll see you back for the next session when we get into some real development conversation. Thank you.